7, 6, 5, 4, 3, 2, 1.
Hello, how are you doing? Welcome along to FTUK's Non Farm Payroll live stream, and a very happy new year to you. Hope you're doing well. You had a great break over the Christmas period. Back to the table, back to school. Non Farm Payrolls for December is about to hit the wires. Just under 15 minutes time, but I think it's going to be a relatively muted affair today because the Supreme Court ruling in the United States is probably going to take precedence over that, and that's where we're going to get the volatility from in the markets. But yeah, non-farm payrolls feels like it's back on track. At the end of last year, from September onwards, it was dreadful. It was all over the place. There was no prints, and then it all got a little bit messy. So it's good that everything is back to normal. As always, there's lots and lots to do at FTUK. My name is Nick Quinn. I'm the CEO of FTUK. It's good to have you with us, and welcome to the markets for 2026. Those prop accounts won't trade themselves, so you've got to be active and you've got to get involved. Please do subscribe to our YouTube channel, of course, as well. It's growing all the time, as is our Discord channel. Go speak to Reza over in Discord, or subscribe to Instagram, all of that stuff. That's where all the information is coming out. And we've got a new account that's coming out next week as well to get everybody prepped and ready for January. Non-farm payrolls, it's here again. Time to jump in and see what we've got looking on the menu for today. We're looking for 60,000 jobs from the previous reading in November of 64,000. Now, this in itself, it feels a little bit muted. The atmosphere is feels a little weak in the jobs market. It's stable, but it's not. These are the kind of numbers that would have been seen as really bad numbers 18 months ago. So yeah, I would say we're a little bit on the low side. We've done some polls on YouTube as well. You can go to the community tab and you can vote on that. You've still got time. We'll have a look at what everybody thinks, but I'm feeling a little bit negative on non-farms today. We're in the mid 4% range still on the unemployment rate. That in itself, I don't think is going to move the needle much at all today as well. 4.5 from the previous reading of 4.6. That average hourly earnings as well, that's where you're going to get your sense of optimism from, if we're going to get it. But I don't think this is going to be doing much for us today at all. 3.6 is the reading, expecting a slight uptick from 3.5, and the same with the month-on-month reading as well for average hourly earnings. That is expected to take up slightly from 0.1 to 0.3. I don't think they're going to be moving the needle very much at all. ADP, is that a gauge? I don't know, maybe. We've rectified ourselves from being a negative print of negative 29,000 last time out, but 41,000 came in at actually. It's okay, but we're not going nothing really to write home with on the private sector. So if that is any benchmark, then I don't think the odds are looking particularly good for a positive number today. But things can change, they really can. Jolts as well, if that's going to be a precursor for us as well. The numbers for November came out as well. That ticked lower as well, 7.146 million. So again, there's not a great deal in that either as well. The job quits as well, that ticked up a little bit, so you can feel that weakness in those numbers. Will non-farm payrolls follow suit from that as well? I don't know, maybe, potentially. That's what we've got looking the landscape today. I want to go into some of the detail around that, but I got to be honest with you, today I don't really feel there's a much clarity around it, and I'll go into those reasons in the 10 minutes that we've got before the print. So it's not something I would want to be aggressively involved in. I'd rather just see what happens, see how the landscape gets panned out over the next 24 hours because of the Supreme Court reading, the decision on Trump's tariffs. So let's just see, if you've never joined one of the live streams before, if you're not part of FTUK and you've never seen non-farm payrolls, it's probably worth starting January with a quick primer so everyone knows what's going on. It's a government statistic that's printed on the first Friday of every single month. Everybody is included, except if you're a farmer, you're not included in that. If you're in a private household, you're not included in that as well. If you're in a non-profit organization, or you're part of the military, or you're self-employed. But apart from those people, everybody else is included in this statistic. It gets printed by the Bureau of Labor Statistics every single month, and it's the first Friday. Now, 80% of the US workforce are included in this data that contributes to the gross domestic product reading, which is our massive growth reading out of the States. And it gives us a deeper understanding in terms of what's going to be happening in GDP and growth and the health of the overall economy. That is ultra important. Why? Because everybody pays attention to it. And when the US is basically, sneezing, they say that the whole world gets a cold. Still to this day, there's a lot of truth in that. The market takes the information and it prices that forward, which is where you get the volatility in the different assets from. Now, why should you care? Well, you really do need to care. Why should you care? Because it's the most important data that we have as traders every single month. You have to care. All the professionals were watching it. Everybody at a bank is watching it. All the governments around the world. Everybody is focused on this particular event in the month. So yeah, it really is massively important. And you should be, if you've never done it before, then you only get one opportunity a month. So if you're starting your journey as a trader, you've got to pay attention to non-farm payrolls, because you'll see what the market reaction is to a number that's in line, a number that's too high, a number that's too low, and that it really helps you develop as a trader. So if you're trading it or if you're not trading it, you need to know what it is and how it is working. Now, you don't have to trade it. I'm not someone I certainly wouldn't want to be trading this particular one. That's my own opinion. That doesn't mean to say that opportunities are not there. Of course they are. But I don't like the fundamental outlook at the moment. It feels a bit hazy to me, and that's fine. That's okay. As a trader, you do go through phases where things don't feel very, very clear. You feel like you've not got a grip on everything. And I think that towards the end of last year, it felt like that. It felt like we didn't have a grip. And now with everything that's happening in Venezuela and the geopolitical landscape, yeah, it's a little confusing. And that's fine, because the clarity comes back. Now, you can learn an awful lot from watching this, and that's why we put so much effort into putting these live streams together to get everybody focused on the price action, whether you're making money out of it or whether you are not making any money. The best gauge I can give you as a trader of, nearly 20 years experience now, is the most useful use case from a trading point of view in non-farm payrolls is not, for me, it's not the actual event itself. It's the week after. So not the Monday, but the Tuesday, because we usually get quite a quiet session on the Monday post non-farm payroll. But by Tuesday, things start to settle down. So if you're a swing trader or a position trader, you'll quite often find that the non-farm payroll range that we get in price action today will be a really good line in the sand for you to work with from sort of Tuesday onwards for those swing trades, those position trades that can really give you a good handle, because the market sorts itself out, the weight has been distributed in the price action, and then the technicals play out very well. So for me, if I am picking up some information and some insight from non-farms, take the data, bake it into your fundamental cake, as it were, and then use that to paint out some good structural trades for the coming week. Now, let's go through some of the simple themes, the themes that have been driving price action at the moment. We've got 7 minutes to go. What has been going on? Well, we've got a sense of war, actually, in the US, with what's been happening in Venezuela and also Greenland as well. Now, I think for me, what's been missed in the US at the moment is what is this obsession with Venezuelan oil? I mean, obviously, the US produces a lot of its own oil. I mean, it's a slightly lighter crude oil, the WTI is, in comparison to the heavier type that you get in Venezuela or, Brent in the North Sea. We're not going to do a crude oil masterclass right now, but the important point is that is this important strategically from an oil point of view for the US? I don't think it is. I think the play here is it's not about the US wanting the oil. It's about preventing the Chinese and the Russians from getting easier access to the Venezuelan oil. I think that's what it is. That all ties into Taiwan. So for me, the big driver at the moment is Taiwan, because all those semiconductor tips, if that all falls apart, that really screws pretty much the entire world over. So the Chinese are keeping a very close check on that. So I think the US play in Greenland and also Venezuela is about counteracting that kind of that Taiwan thing, because of course the Chinese, they need all that oil. So I think that's where it is. Now, the data itself in the United States, I think it's slightly confusing. I have to admit, I don't think we're going to get clarity today from non-farms. I think even if it's in line, I think it's going to be okay. You'll maybe get some volatility, but the interesting stuff is going to be later in the session today, once the US markets are actually fully open. Looking a little bit on the weak side, yep, you can see that in the other data as well, despite the ADP coming back a little bit. We'll go through the polls as well that everyone's been participating in, and we'll see what everybody else thinks about it. Imports themselves, they've been falling. That's due to a lack of demand. That's our low growth in the States, and also as well from the impact of the tariffs as well. That could potentially cause our volatility if that unwinds with what happens in the US Supreme Court later today as well. In itself, lower imports like that can be a recession indicator. So you could be looking at a recessionary environment in the US into sort of the Easter period. I mean, we'll have to see. So for me, I don't necessarily think it's going to be a market expectation interest rate play. I don't think that's going to be the big driver. I think it's more of a risk on, risk off type sentiment, and that in itself makes it a little bit more confusing to work with. Focus is going to be completely, for me, the main focus is going to be on the dollar because of the Trump tariffs, because what you've got to bear in mind is all of the tariffs, they're all paid for in US dollars. So if that has to get unwound, then it's the dollar that's going to take the brunt of that. You'll see the pricing on that when I show you the actual charts. The dollar itself on the dollar index has been rallying very, very nicely the last few days. For me, that's short covering on the dollar, as in shorts getting out and coming back out of the market. That's uncertainty. So that gives us a risk on, risk off type environment. 4 minutes to go. Thin markets. Yeah, we've got thin markets out there as well. So this is the big thing for today's session. Probably not the non-farm payrolls, but what's going to happen afterwards. If the Trump tariffs are deemed to be illegal by the US Supreme Court, that's going to really, really kick things off. It could be in a meaningful way. That's where you'll see a lot of impact in the dollar that will feed into the gold and silver markets as well, which have obviously been on such a barnstorming run over the last 2 months. Watch the safe havens as well. The dollar against the yen, the Swiss franc as well. And for me, because of the sensitivity around Taiwan, around Taiwan and how that's connected with the geopolitical environment at the moment, the NASDAQ has to be the NASDAQ. The tech sector, I can't believe this. I read this morning, the tech sector is actually underperforming, completely underperforming against the Russell. And that's surprising. So that shows you the sensitivity. For me, throughout the course of today and next week, I'm focused on the US dollar, the dollar index primarily, half an eye on these safe havens, the Japanese yen, and then also the NASDAQ as well. Those are the two I want to see how they react to non-farm payrolls. Right, we've got just over 2 minutes, or 2.5 minutes. Let's have a quick look on what's the polls are printing at. Now, I apologize, the clock's over the bottom of that, but I can tell you, we've got so we put the polls on YouTube this morning. We've got above 60,000. It's quite evenly balanced on YouTube as well. 53% of people are suspecting that it's going to be above 60,000. 47% are expecting it's going to be below. Slightly much higher on Twitter, actually. 60% of people on Twitter think that it's going to be above 60,000, and 40% think it's going to be below 60,000. You are an optimistic bunch. I'm going to go on the opposite side. I don't know. I think it's going to be a low number. We'll see. Anyway, it's time to settle down, and it's time to focus on the actual price action and the charts. Let's just jump over to the charts and start having a look. There you go. You can see the dollar index there in front of you. This is that short covering rally. That's a thin, starting to look like a thin market. That elevates up to a, that's where you're going to get volatility that's going to push to the upside as you get these sort of the buy stops then sort of get triggered in waves, and that's where you get this sort of parabolic move. If you want to get along that kind of a market, this is the daily time frame, then what you really want to do is you want to be using a parabolic. That is the best way of looking for key support points as that sort of the orders start to ping off that. So any upside in here is obviously going to focus on this 99.5 area up to the wick there around about 99.33. Now I'm going to keep half an eye on the actual data because we're not far away now, and I obviously don't want to miss it. Let me just give my things a refresh. Yeah, so we're not far away now. Just a minute to go. And the other one I just wanted to quickly reference was the NASDAQ. And it's this, you've got to have a daily time frame picture in mind when looking at the NASDAQ, because look at this ascending triangle. That shows you the compression. So this should be a pretty bullish breakout if this triangle does actually work out. So these reference points here of 25,790 versus this support on the trend line down here at 25,300. That is going to be where the key areas are going to be. Now, let's just get down to a 15-minute chart. You've got 20 seconds to go. Good luck if you are trading. Look at that beautiful trend in the dollar there. Let's see what these numbers get printed out at. Got 10 seconds. Good luck. Here we go. 50. Yeah, slightly lower. So everyone was wrong. Look at that dollar go, pinging straight away. Wow, goodness me. Really, really strong. Nice move up there. Yeah, you could be expected that could be a sort of like a fade thing, depending on what's going to happen with the Trump tariffs later on as well. The sensitivity is going to be in that dollar. I can just feel it. Let's have a quick check on the equity markets as well. I mean, slightly more muted as well. Decent reaction, relatively decent reaction. Gold and silver, you should be getting a little pressure spike there, but bought back straight away on gold. Look at that, spike down to 4,458. So yeah, I suspect, if we do get an illegal reading on the Trump tariffs from the Supreme Court, that's going to put this gold market under a bit of pressure, as well as silver. You would assume, same type of deal. It should instantly scoot back up. So that shows you how much still in demand those gold and silver markets are. Now, for me, I don't actually personally see what can happen very often. This is just experience talking. When you get markets like this that have been on such a run, people come to the table in January and February and think, okay, we just need to join in on this. And then by the time you get to Easter, you've ended up in a market that's essentially just gone sideways. So for me, these markets are in range-bound mode until something fundamentally comes along to shift that balance or give me that continuation point. So I definitely wouldn't want to be just constantly trying to buy the dip on gold and silver at the moment, unless you're a long-term player. If you're a long-term player, then it's a little bit of a different game. Unemployment, let's just check on that one. Unemployment, that ticked down. Okay, that's interesting. I didn't think that was going to 4.4% from the 4.5. Market was wrong on the 4.6. So that in itself is not too bad. But yeah, that dollar is the one that I think you're going to get the most traction on throughout the session. It's definitely where you want to keep your attention. Yeah, it's coming off straight away. Let's just see what's going to happen with the Trump tariff Supreme Court reading. It's going to be 10 a.m. Eastern time, which is probably just in an hour or so. So that's really where the sensitivity is going to be. You can see the reaction is looking pretty strong. So if you manage to get anything out of that, then I think you've done pretty well. I don't necessarily think that I would want to be heavily active simply because it does feel a little bit uncertain out there at the moment. Let's just have a quick check on the Japanese yen. Should be following the same type of thing. Yeah, so the same sort of thing. You're going to get the same kind of bang for your buck against the Japanese yen. In fact, you could almost say that given the uncertainty that the dollar against the yen could be the spoils of the day by the end of the session. But let's just see how things go. Let us see how things go. Yeah, very, very interesting. Now, before we actually sign off for the day, we've got to quickly talk about our new challenge. A lot of work has gone into this. We are very, very excited and proud to announce that we've got a new challenge starting next week at FTUK. This is called our Lightning Challenge. It's going to be a game changer. I think it's very, very cool indeed. There's a lot of work gone into it. It's a very fast, simple way of getting some money at the markets. I suppose the thinking behind it was it's Christmas. Everybody's spent a lot of money. People are a bit broke. You need some extra cash, and you need a cheap gateway to get into a decent prop account. The Lightning Challenge is your route in for sure. It's a very simple challenge. It's a timed challenge as well, and it's done over a 7-day assessment period. So it's basically a one-step And in that time, what you have to do is you have to make a 5% profit. It's a really low barrier. So that's something that certainly a lot of people can achieve. If you look in the description section of the live stream, you will see that there's a very nice landing page on the end of that link. And this will give you all of the details of how it works and what you've got to be able to do. You have to make a 5% target over a 7-day period. It's a split entry as well. So if you do not pass, you don't pay the full fee. Yeah, so it's a real cost-effective way of getting some action in the markets. And also as well, if you end the 7-day period and you haven't reached the account, which obviously would be a good thing, but you haven't managed to hit the target, you get a free retake, which is amazing. So you get 2 bites of the apple. So you've definitely got a very strong chance of getting something out of this prop account. There's a whole breakdown of how it all works, and it's a very cost-effective way of doing it. If you pass first time, take it seriously and pass first time, you get an extra 2% on your funding balance once you become funded. Accounts range from 10k up to 100,000. And at a 5% target, it's a very, very nice way of getting involved in the price action. Yeah, very, very nice indeed. So that's going to be live on Monday. Please pay attention to the socials. There'll be an offer and all that sort of thing that you'll get active on the website from Monday. And that is a great vehicle to see your January out in fantastic style. Kickstart for 2026 as well. We've done some amazing discount offers over the course of the last few months. They're all coming to an end, unfortunately. I'm sorry about that. 50% off is half price accounts with all of the add-ons included on your futures accounts and your forex accounts. That is still active to get yourself set up for January. So whichever way you want to go at FTUK, there's the perfect account for you, and it's all set at the right price as well. Kickstart 50 is the code that you're going to need on the checkout between now and Sunday. And after that, it's all gone. So, the offers have been amazing for like 3 months. It's all going to change from next week. So hopefully we've got enough for everybody, depending on what it is that you want to do. So there we go. Great non-farm payrolls. The US Supreme Court will be just around the corner. That could really kick things off. It is confusing out there, and the markets have been thinning out a lot, but the big money will be coming in over the next few days, so make sure that you are at the table. Thank you very much for joining us at FTUK. Have a great week in the markets, and we'll see you all next week.